YieldMax's YBIT, a case study in underperformance amid Bitcoin's bull run. How a high-fee, poorly executed strategy is costing investors. As Bitcoin surged to new all-time highs in late 2024 and early 2025, investors flocked to Bitcoin-linked ETFs to capitalize on the rally. Yet, YieldMax's Bitcoin Option Income Strategy ETF, YBIT, has emerged as a glaring outlier. A product that not only failed to deliver meaningful returns, but actively eroded value for shareholders. Here's why YBIT exemplifies the pitfalls of YieldMax's trading strategies, especially when compared to competitors like Roundhill's YBTC and Simplify's MAXI. Catastrophic NAV decline despite Bitcoin's rally. While Bitcoin itself soared over 148% in 2024 and continued its ascent into 2025, YBIT's net asset value, NAV, plummeted by negative 29.01% from its inception in April 2024. Even more damning, its total return since launch was a paltry 3.09% as of December 2024, compared to YBTC's plus 25.97% over the same period. This underperformance is staggering given Bitcoin's bullish momentum, exposing YBIT's flawed synthetic covered call strategy. Key issue: YBIT's strategy caps gains by selling call options, sacrificing upside participation for income. In a raging bull market, this approach has left investors with crumbs while Bitcoin feasts. Unsustainable dividends masking structural weakness. YieldMax touts YBIT's eye-popping 64.46% trailing dividend yield, but this figure is a mirage. The fund's distributions are heavily reliant on return of capital, ROC, with 100% of recent payouts classified as ROC. This unsustainable model effectively liquidates the fund's principal to maintain high yields, eroding NAV over time. By contrast, YBTC offers a 39.71% distribution rate with weekly payouts, structured through actual option premiums. Simplify's MAXI generates income via short-dated options on equities and fixed income alongside Bitcoin futures, providing a downside buffer without cannibalizing NAV. YBIT's dividends are a textbook case of robbing Peter to pay Paul, prioritizing short-term optics over long-term viability. Fee bleeding and inefficient management. YBIT charges a 0.99% expense ratio, higher than YBTC's 0.95%, while delivering inferior results. For context, YBTC employs an actively managed covered call strategy on Bitcoin ETFs, adjusting weekly to market conditions. MAXI combines Bitcoin futures with diversified option spreads, balancing income and capital appreciation. YBIT's fees are not just high, they're unjustified. The fund's synthetic strategy, using options on Bitcoin ETPs rather than direct exposure, adds layers of complexity and risk without commensurate rewards. Volatility. Mismanagement. YBIT's lower volatility, 9.39% versus YBTC's 11.50%, is not a strength. It's a symptom of its strategy's limitations. By capping upside potential, YBIT dampens volatility, but also ensures it lags in bull markets. Meanwhile, YBTC's slightly higher volatility reflects its ability to capture more upside while still generating income. Alternatives that shine. Roundhill's YBTC, actively managed with weekly distributions. YBTC's plus 25.97% total return since April 2024 underscores the effectiveness of its covered call approach. Simplify's MAXI. While newer, MAXI's hybrid strategy, Bitcoin futures plus equity fixed income options, offers both growth and income without NAV erosion. YBIT, by contrast, is a cautionary tale of high fees, poor execution, and marketing over substance. Conclusion: YieldMax's misstep. YieldMax's YBIT is a product trapped in a paradox. It promises Bitcoin exposure but structurally undermines it. In a market where Bitcoin ETFs like YBIT and direct holdings soared, YBIT's NAV decline and meager returns highlight a strategy that is subpar at best, reckless at worst. Investors seeking Bitcoin-linked income would be better served dumping YBIT for YBTC or MAXI, funds that understand the assignment. YieldMax's YBIT isn't just underperforming. It's a masterclass in how to squander a bull market.